Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Mayer with the Bulletin Board Heroes on Friday, March the 27th here on Share Talk and sponsored by the UK Investor Show. Starting off with Clontarf Energy, an old favourite for the heroes. You can see here that the shares have broken this resistance line there at 0.7 pence. End of day, end of week close today above that line should allow the stock to retest the main post-December resistance towards 1.2 pence. If you're particularly squeamish about the stock, maybe wait for an end-of-day close above the 50-day moving average, just below 0.8 pence instead. Dev Clever has been called up here from around 1.2 pence. It's obviously had its ups and downs since then. That was, I suppose, in January. We've had a bear trap rebound from below the 50-day moving average around the 2.6 pence level, and gap today through the 200-day moving average just below the current low of the day. At least while we're above the 200-day line, once again looking for a top of October trend channel target as high as 5.25 pence over the next 4 to 6 weeks. Stop loss back below the 50-day line is probably the best way and the safest way to go at the moment. Diurnal, I think I've looked at once here in the past, and today very good news on a fundamental basis for the company. Market not quite as excited perhaps as you might expect, but we've already seen the shares move up from 20 pence a couple of weeks ago, so perhaps good news was factored in here. Second gap in the last couple of weeks to the upside, second unfilled gap. So that suggests that once we clear this 30 to 40 pence resistance zone, we could head up to the top of a broadening trend channel in place since last April, as high as 60 pence as a best case scenario target. This stage, the stop loss back below the 50-day moving average should be enough. That's around the 25 pence level at the moment. Sorry, apologies, 29 pence level at the moment for the shares. On to Big Dish, which has obviously been rather crushed in terms of the share price since the end of last month off the back of coronavirus issues in the restaurant sector. But we just got a glimmer here of a bullish development with the shares bouncing off very oversold levels, quite obviously, but also breaking that February resistance line around the 0.7 pence level. While we're above that, looking for at least a fill of the gap on the way down towards 1.5 pence, even if the shares then need to consolidate again after that. Another stock which has been up against it in the recent past is Hemagene, but not today. Here we see quadruple bounce off that December support line there towards a penny. And the view at this stage is at least while we're above the 1.25 pence intra-week high that we had before over the last couple of days, the shares could at least head back towards the 50-day moving average at 1.75, but it will only be really a break of that, which would take the stock up to the main post-November resistance at 2.4 pence and establish decent bullish credentials. In the near term, we've seen support resistance come in from the old December support, so really need to crack that 1.6 to 1.8 pence zone over the near term. Probably the most bullish stock of the day in terms of the price action that we've seen in the recent past is N4 Pharma. Here, a wonderful green candle there, breaking through all the post-September resistance for the stock. The view at this stage is an end-of-day close above that old September peak towards 4.5 pence. Should be enough to deliver at least a retest of the 6 pence zone, which was the resistance in July. Looking at the bigger picture, you can see that there's plenty to go for here. The main resistance from last year is actually up at 8 pence, so above 4.5 pence looking pretty set fair for N4 Pharma. Recapping on Oracle Power, rather, as it is now. Here you can see that the stock just trying to break through the 50-day moving average and a line of resistance from February. Really need to hold above, I suppose, 0.8 pence on an end of day and a week close basis. Would then hopefully provide the trigger for a fresh attempt on retesting post-January resistance at 1.2 pence over the next few weeks. Red Emperor looks like it's back on the map in terms of the bulls, with a gap through this top of this falling wedge for the stock at 0.45 pence. While we're above that, and especially if we get a end of day close above the 50-day moving average of 0.6 pence, we could have a best case scenario target for the shares at the top of the top of this broadening triangle that we've got there from December, heading as high as a penny. Stop loss back below the gap, and 0.45 pence should do the trick. Finishing off with Sarium, and here you can see another stock just breaking a trend line there. That's the resistance line there from January. Also tying in with the 50-day moving average at 0.35 pence. If we can remain above the 50-day line, the target here up towards a December resistance line projection, currently heading towards 0.55 pence, and that could be a target for as soon as the end of April, especially as we gapped up and have left that gap open from the middle of this week. That's it from me today. See you again on Monday.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.